What's up to everybody out there? You know me, PCG Wealtication. Today I want to just speak on a little bit about what is private funding, right? So with that being said, let's go down the road. First of all, I'm gonna break down, some things, and the B's, just represent the informational cartels, etc. You probably hear me say it in a while, right? So with that being said, raising capital money outside of traditional banks. So I want to speak a little bit also on money. What is money? Currency. And what's the difference between this money side and that money side? Well, over here, this was actually our lawful money, which was of substance, backed by gold, before the gold standard was removed in 1933, right? If you look at all the money and currency that was in circulation, they had the two lines, the two pillars, really. Over here, they finally had went on ahead and made the currency out of Federal Reserve notes, for private and public, etc. They say it was legal tenders with one line, which brought us into the stage of 9/70. So nothing was backed by nothing anymore but your label, etc. to tax us, right? So with that being said, let's go down the road talking about private funding, right? So primarily for us at Wealtication, it's gonna be equity financing, right? So everything I'm prepping and proposing and indirect, bring it to the public as time go on. I'm just letting you ride with us for a minute to see how this thing works and where we're going. In case you want to jump on board with us, also, it's not just actually a direct teaching program like it looks. It's actually an action course that we're in the middle of doing things as I speak on, right? So with that being said, alternative would be private lenders via debt finance. So that's pretty much, we all familiar with private lenders. If you're trying to accomplish certain, real estate assets like apartment business, etc., you're not really going to your traditional bank, how it may look. You're going to different private lenders. Not saying that these traditional banks don't lend in that sector, but majority of the time you're dealing with a private lender that's pretty much an individual, smaller institution that they primarily, lend to people that's finding these type of assets. And you got, private individuals that, lend money against the real estate, etc. You also got the opposite we love, equity. So with that being said, that's the alternative I'm using, just doing private borrowing from different individuals. I could do that just to keep things where I'm going at with things, but my primary goal is equity financing, right? And we're dealing with equity finance, you're dealing with the issuance of securities, bonds, and stocks. So everything in this world is based on two things, whether people want to admit it or not. It's going to be based on a bond. Because you go borrow money, it's an indirect bond, right? It's a maturity date and everything. That's why it got, a certain time that they say it's going to, be paid off, and then you got a stock which represents equity on the books, right? So with that being said, when you look at all the ties to any institution that's floating around, how the individual owners going to be recognized inside these anonymous structures from so-called government-looking entities, from the Federal Reserve, etc. People track down the individual stockholders, which could be tied to another entity, like when people in the 80s discovered, like probably before that, all these so-called banks had, stock certificates to the Federal Reserve and, different other things. So just showing you all these powerful families, they operate through a trust or separate to another entity, subsidiary, and they all play through these stock certificates, hide behind the scene, because the stock certificate is going to have to reveal who the owner of the stock really is when you're in the private market, right? Okay, bonds also. So you actually do, a fundraising, project based on bonds, issuing bonds and things like that, convertible bonds converted to, common stocks. You gotta be careful doing, like I talked about that in a lot of my literature and things like that. But I like to focus on the stock because, the bonds is more indebted, and it's a good thing. It's the opposite from just borrowing money, but it's actually indebted, so it's a form of debt also. You're just not going to the bank saying, let's borrow this money. You create these bonds to issue to another individual or institution, etc. So that's dealing with issuing securities. So saying all this, one of the primary people we would need in the midst of doing this would be our professional, you want to say expert, is going to be one of the first professionals we would need is a securities attorney. Now you get a great, outside security attorney, understand, how to draft up certain paperwork you may need if you're going to individuals and, like I say, investors and, and credit investors, things, try to raise funding. But you're going to need something dealing with, documents, because now on this side, you are making an offering versus you go to the bank and they're making an offer to you, creating this so-called loan which is a security agreement disguised in a loan agreement, right? But over here, you're creating the terms and you write your own Bible in a sense, because you're creating the limited partnership and the PPM, which is the private placement memorandum, right? So you are actually creating the terms that you're looking for, negotiable with your partners, etc. Everything works on your behalf and the behalf versus when you borrow money from a bank, it's always going to be standard, it's going to be aided no matter what you're trying to get around. There's ways to get around it, but they have more power because it's directly a real and here's a contract. So over here we're talking about, so when I say that, I'm saying that we're going to get a securities attorney, right, to draft our LP, which is a limited partnership if we're starting a fund. Now in my situation, I'm doing slash a fund also has to control the rest of my ventures and different performing assets, right? So Paper Circle Group is actually operating as a fund management also in-house, and also for outside investors also to come in and say, well, we like what you got, Cage. We need to, get in with you too. But we already got things that's already established that we can sit down with potential investors, etc., and they see that, well, this guy here really know what the hell he's doing. Okay, so with that being said, I don't know quite sure if you really would need a limited partnership. You just doing a venture. Like also some of my businesses, I want to do a share with Wealtication. I don't know Pacific directly if I would need a limited partnership. I think I would just create one, because anybody come in as a investor with me as a stakeholder, stockholder, whatever, he's not just lending me nothing. He just is investing money into my venture, and I'm sharing a share out to him, right? So it's the opposite of borrowing money, where it's debt finance, it's all equity on the book. So with that being said, after I broke down this, where I went at, you would need the limited partnership if we start the fund. And for real, we gonna always need, this is what I try to get everybody to see, the PPM, which is the private placement memorandum. Okay, so with that being said, your private placement memorandum is pretty much the overall agreement that you're sending out to individuals when you're doing the different offering, which you got to be private. It can't be marketed like it's public, because you could be kind of like targeted at the SEC, because all this is private. So you can't be just going out in the public saying, hey, I want to raise this type of money and shooting if you're social media. You can, it could be a subliminal message, but they want this to stay private between you and sophisticated investors, accredited investors, and up. Nobody, retail investors, is supposed to be dealing with you, but you could make options, and like me and my guy Troy always do, we trying to find people that may not know their status as an accredited investor. We know that they say that, you saying you're a millionaire, so we're trying to incorporate you as a partner, but we're going to need you to get on board with us and, get your tax forms and, make your accredited investor. You want to come in, because a lot of people who may have this type of status may not be on paper yet. Like us, we already established ourselves as accredited investors and also institutional investors, because Paper Circle Group is a conglomeration structure that going to have different entities involved with it. See, it's all organized and structured in that form already, just going to the dimension. So with that being said, this is my position, so you can kind of get a better idea. Like I tell people, I'm not trying to change nobody's mindset. I'm just here to make people see certain concepts better. So I know a lot of times, not everyone, because everybody now is interested in how to sell parts of their company off and deal with it. They just want to borrow money, etc., and get it out the way and go about their business. I get it. But if you've been wondering how do this side of funded work, you see guys go on Shark Tank, or you just know people that's doing private funding through different publications, raising X amount of dollars, you should understand that they're not just going to the traditional bank, get this money started. They're talking about seed fund, etc. Well, this is the side where they have to understand dealing with equity financing. So once again, this is all based on private funding, not public funding. We're going to the bank with a good credit score, good business score, and all that great stuff. Also, that's public. Over here is a form of private, because we're in the private. Now, it may not be the private where we come from dealing with the sovereign, executive, and all that. It's still dealing in the public also, because if you operate through a limited liability company, all C corporation, one of the best forms you use to do this, it still be issued through the state, which you can use anonymous Delaware structure and things of that nature. But the point I'm saying is, your trust got to be somewhere in the making of this curtain to come back and say, nah, we own this C corp, etc. Well, we don't own it, but the trust owns these other entities to protect it in the shadow, because the IRS is actually public, is taxing people, not just in the public, but people know what's going on, getting taxed who doing private deals. And I'm not saying you're not supposed to pay taxes, but you're making a taxable event by certain deals that you're doing, not knowing the nature of the procedure of things. So we got to understand the difference between exchange and transfer. When we exchange something, it's kind of like putting you in a situation where it's a non-taxable event. That's why it was barter. That's why they still have the codes where, you know, the phone, I'm not going to speak it, but the exchange phone. See the difference? Because everything was exchanged. So that's a big difference too. So there's certain words that you could use that separate certain things also. So I'm out, J. Cage again with Wealtication. What is private funding? And I'm gone.